Rich, you think the Fed has exhausted most of their capabilities here?
Well, look, the markets are resting on a couple of issues, one of which is a continued involvement by the Fed, which I expect them to be very, very aggressive when necessary. But if you look at what they've done to date, they've cut the funds rate to zero, eliminated reserve requirements, lowered the rate on the interest on excess reserves. They've extended forward guidance, and now they've engaged in inflation averaging. So most of the tools that the Federal Reserve, as we know it, have already been exhausted and really have had a tremendous impact. So the markets really are impounding future impacts from these same tools. And my position is that they're going to be less impactful. Sure, they'll be able to lend to businesses, municipalities, states, cities. If the markets get gummed up, they'll come in aggressively. But my whole point with the Fed now is the impact of the Fed going forward will be less than it has been in the last few months. And we really need something out of the fiscal to bridge us until economic recovery resumes. And that likely occurs when we start getting a vaccine. Now, the Abbott news is very significant today. So I believe the Fed is supportive, yet less impactful than it has been.
Well, a vaccine would definitely be more impactful on all of us in human around the world, certainly, Kerry. But the Fed is definitely a part of this story here. What else do you think the Fed might have in its sort of quiver of arrows, so to speak, if anything?
Well, I just want to address the point that a couple of people have made, suggesting that the Fed is really pushing here and perhaps looking at the wrong things. But the way I learned it, there's inflation when demand is greater than supply. And currently, there's an awful lot of supply. If you think about different sectors, energy, excess supply, most commodities, excess supply. You look at things such as restaurants, services, apparel. We can come up with a long list. Labor, there's excess supply right now of labor. Where there isn't excess supply probably is healthcare. But I don't see how there are all the pressures that people talk about for inflation in the current environment. And, Jay Powell is well aware of that. There are more concerns immediately about price falling rather than price rising, despite all the borrowing and all the financing that the government is doing.